Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on the evening of Friday, July 5th, after the market has closed, and AMC closed at a price of $5.05, being up 0.4% on the day, flat in the after hours, and closing 5 cents above max pain. So I do think that is good, but I also did want to point out before I get into the chart that max pain for the month of July, more or less, is $5 a share. However, for the expiration, the monthly expiration on July 19th, max pain is $4.50. So I do think it is quite possible we do see a pullback in the coming weeks. There might be some nice dip buying opportunities around then, but if we are able to close the next couple Fridays above 450, above $5 a share, I do think that could be looking really good for the stock. But more or less, what we're seeing here is just a lot of consolidation, sideways movement ranging between the 786 here at $4 and about 41 cents up to the golden pocket here, ranging from the 65% to the 618, ranging from $5 and about 71 cents up to right around $6.01. So as we can see, following the big squeeze and pull back here, we have been residing in that range. And so as of right now, I have not drawn any new levels up here from last week. I did want to add a couple in just a second, but I did want to go over what we've been looking at. So here, this is the uptrending level that I had previously drawn. Apparently we have broken below it. It was, as far as I was concerned, suggesting that we were putting in higher lows, but then since we did break down below it, we are still putting in higher lows, but of course not respecting that trend line. So I'm actually going to delete that one. And what we have instead is this orange uptrending level of support, which we did test on April 16th when we hit the all-time low of $2.38. And then the other pivot point was the day before we started to squeeze up here on May 10th, hit a low of $2.90. And so I feel like we may very well be testing that level again in the near future. And I think that could correspond with a pullback down to around 450, like that max pain on July 19th. So, I would not panic if price does come down like that. I would think of that as a dip buying opportunity, especially if we are to continue to hold the 786, like I said, at $4.41. And then I also do have this yellow line here drawn at $4.10. That was the low hit on May 31st. The lowest low that we've seen following that was hit on June 25th at a price of $4.33. So hopefully we do continue to put in higher lows if we do pull back and we don't come down lower than 433. So that is a price I would be looking for us to hold above. Even if we get a wick below 441, as long as we don't get a wick lower than 433, we are then maintaining higher lows and looking pretty good. But speaking of which, I did want to just zoom in on the chart here so we could look at the more recent price action a little bit more closely. And actually looking at the chart right here, it does stand out to me that we did have a gap up here between May 31st and June 3rd. And so the close on the 31st was at a price of $4.33. Coincidentally, maybe not. That was the low, like I said, on June 25th. So, that gap has since been filled. We don't really have anything pulling us to the downside regarding, filling a gap because, actually there was a gap here between this close and this open, but we did get a wick down, like I said, to 410. So yeah, no gaps to the downside in this time frame. But one thing that does stand out is that it does look like we might be putting in a topping signal, especially when I flip over to the weekly chart, which I'll do in a minute. That does suggest to me that we will be seeing a pullback next week, as we did get while it is a green day, price did close higher than Wednesday's close, which was at $5.03. We went up just about 2 pennies relative to that close, but we did get on Wednesday a pretty big red candle at the top here, coming down 3.45% on the day. And so it does look like right around $2.26. We did not get any closes above that level. And actually the highest close that we saw was on July 2nd at a price of $5.21. But it does look like we are starting to roll over. Didn't get a bearish engulfing candle on Wednesday. So, it could be worse. But, we do have this little spinning top here, or this doji, nearly doji, as we opened at a price of 506 and closed at 505, just trading, down 1 penny over the course of the day. And so this doji, this spinning top, does suggest a reversal, that there could be a potential reversal. So whether that is a reversal from this down move, suggesting upside, or if that is just a reversal from this green candles that we have seen. And so taking a measurement from there to the top, price did go up just about 24% since the low of June 25th. So I do think we could be seeing a pullback. And so there are a couple ways we could, draw up some levels that we might be coming to. And so one is just by drawing a trend line from the low hit on May 31st, which was $4.10, coming to the low from June 25th at $4.33. And so with that locked in place to the penny, we can see this uptrending level that may be acting as support if we do pull back. Like I said, I think $4.50 seems like a reasonable target. And another thing that we can do is take a Fibonacci retracement from the low here up to the high, and we can get an idea of a level that we might be pulling back to. And so now locking that into place, now that the levels are marked to the penny there, the high and that low. And so looking at this, one thing that, stands out is, as always, the golden pocket, which ranges from about 469 up to 472, so right around 470. Another level is the 50% retracement at about 85, but then also the 786 at $4.55. And I find that one to be most compelling, as that does correspond with $4.50. Also, it does correspond with the tops over here when we form this bottom. So that could be acting as support if we do pull back down to that level. Whereas, there's not as much here at the golden pocket or the 50% level, but actually the 50% level does correspond with this bit of consolidation that we saw. So maybe there is something there. But what stands out to me, especially about the 786, is I could see price coming down to that level and coming down to that uptrending level that I just drew. And that would be right around July 17th. So just a couple days before that max pain of 450. And so over the course of the next couple weeks, I would not be surprised if we do see a little bit of a fade down to right around $4.50. And the way that I am viewing that is that it is a dip buying opportunity, getting shares below $5 a share. I don't think that we're going to be seeing that much longer. Might be getting shares less than that for the duration of July, but August, September, we might be seeing prices going much higher. But before I close the video, as I did promise to do it, I just wanted to go over the weekly chart here real quick, just zooming in, showing that the candle that we saw for the week does look like it was an inverted hammer at the top of the up move from the prior week, which went up 9.45%, closing on June 28th on that Friday. And then we did get basically sideways action. So I do think that does suggest we might be seeing a pullback. And I do think that about $4.50 is on the table for the next couple of weeks. So I am looking forward to that dip. But, you'll have to let me know what your thoughts are. Those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Happy 4th and happy weekend. Take care, you guys.